please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. This is Power Breakfast on CNBC TV18 with the caveat that all the markets are in deep red. We'll be focusing on individual stocks. TATA Motors, one of them, will be reacting to the numbers likely adversely today because JLR, that continues to be under pressure. And Sonia's with us. Is that right, Sonia? Likely to be under pressure, further exacerbated by the moves that we're seeing in the markets?
Yes, in fact, you know, the US markets are under pressure, and Tata Motors, the management indicated yesterday that they are seeing a lot of pressure in some of their key markets like UK, US, Europe, etc. So I expect the stock to be down today. Now, Jaguar Land Rover, the business, the operational performance is worse than what the street was expecting. They've come in with just a 10.9% EBITDA margin, lower than expectations, and they spoke about a whole host of issues, whether it's higher amount of incentives that they had to give out on account of their new products, the weaker markets. They have a huge £1 billion expansion plan as well in a tough market like this, so that puts further pressure on their balance sheet, and they have a negative free cash flow of 5,159 odd crores. Now, JLR, of course, is 90% of the business and it's not doing well, so I expect the stock to be in the red. But the standalone business is improving for Tata Motors. We've seen profits come in this time around. The EBITDA also has grown. However, most brokerages are still negative on Tata Motors because of the weak Jaguar Land Rover performance. Deutsche Bank says that the results were weaker than estimated. It's the higher incentives and a weaker product mix. You know, it's a double whammy that has impacted the earnings this time around. CLSA has maintained a sell with a target price of 395. They say that the weak demand in the West and the weak commentary from the management is disconcerting, and margin pressure from rising incentives is something that will continue. The India business is improving, but it's unlikely to offset the pressure at Jaguar Land Rover. And despite the fall that Tata Motors has seen, the valuations are still not cheap. The stock trading at 10 times FY19 price to earnings. So most brokerages also continue to be concerned about the pressures that Tata Motors is seeing in some of their key markets like UK and the US.
Okay, Sonia, thank you so much for joining and making sense of those numbers. But on that note, let's head across to a chat that Utkarsh Chaturvedi had with Mayank Parekh, the president of the passenger vehicles business at Tata Motors, from the sidelines of the CNBC TV18's Overdrive Awards last evening. And here is what he had to say about the company's performance.
I think biggest factor is focus, but I think if I summarize, one is a huge growth in PV and CV both sales. Then our impact programs which we started last year started yielding results. Our turnaround strategy is in place and doing well. We have seen a huge improvement in EBIT based on basically on our net realization has improved, impact results are coming. We got operational leverage restructured, so on and so forth. So I think now it's payback time. Whatever hard work we have been doing is giving results.
So can we from here, because the costing has also gone down, because our EBITDA margins are really well at this point of time, can we say that from here going ahead as well, we can see the same amount of results coming, or especially PAT levels?
I think these are certainly not one-off results. We'll see continuous improvement. The four results which causes I gave you, reasons for improvement, are structural changes, and they will continue to give good results.
So speaking about the cost side, sir, is all the measures being taken, or we are still there to take more measures, and we can see the betterment of cost come in the next quarter as well?
See, we started impact projects around last year, and this second year just started, and they will continue to give results actually.
Speaking about our sales, sir, Nexon has been doing really well. Tiago has been doing really well. How do you see going into this year as vis-a-vis our performance last year?
I think for last 20 months we have outperformed market, and I see next 20 months again we'll continue to outperform market.
All right, that was the management of Tata Motors indicating that Indian market is doing well, the Indian business is doing well, but JLR is a bit of the concern. But Sonia is still with us. Sonia, Tata Motors is what you've spoken about. Hero MotoCorp, that one will also be reporting the numbers today. What are the expectations?
Well, it's expected to be a mixed bag for Hero MotoCorp this time around. The volume growth was quite strong. It was about 16% and that will lead to about a 12.5% to 13% revenue growth for the company. But the pressure really will come in on margins, and we're expecting about 100 basis points drop in the margins. That's on account of higher raw material cost pressures that the company has had to bear. So realizations are also expected to dip by about 3.5% to 4% on a year-on-year basis. And a flat on a sequential basis. So on the realization front, the number to watch for will be about 41,000 to 41,500 rupees per unit. On the profitability front, also, we are expecting a profit growth of just about 4.6% at 808 crores. On a quarter-on-quarter basis, though, the margins will look like it's a fall. Remember, last quarter they saw margins of 17.4%. This quarter is expected to be about 16%. But last quarter was the festive season, so they benefited quite a bit in both sales and operational, performance. But this quarter around, we're expecting some pressure to creep in. The stock, I think, has been, factoring that in a bit. It's down about 10 to 12% over the last 6 months. Back to you.
Well, let's get directly stock specific and talk about the earnings that are expected to come out today. First up, from the banking space, PNB is expected to come out with numbers, and Abhishek joins us to tell us the expectations. Good morning, Abhishek.
Good morning, Anisha. Well, the focus will be on asset quality. So slippages, which were at 3,460 crore in the previous quarter, anything below 3,500 crore will be positive. Although analysts on street like IDFC Securities is estimating a slippage of 4,500 crores. Now, the bank raised about 6,315 crore during the current quarter, and government has promised about 5,400 crores. So 11,800 crore of capital coming in H2 FY18 will be very positive for them. Now, loan growth in double digit will be positive. They have been giving domestic NIM. Last quarter, it was at 2.62%. Any improvement in domestic NIM will be positive. Gross NPA, which was at 13.3%, any improvement over there will be positive. Our polls suggest an NII growth of close to 10.5%, and given the low base of last year, net profit is seen 169%. Back to you.
All right, Abhishek, thanks a lot for that. From banking, let's move on to pharma. Then Lupin is also expected to report its numbers. Ekta, what are the expectations?
Well, it's going to be more of the same in terms of the pressure that we're probably going to see for the US markets for Lupin. So, for example, the revenue is expected to decline around 12% and that is primarily going to be led by the kind of pricing pressure that we're seeing in the US and the North American markets, which is around 35% of sales for Lupin. That is probably going to trickle down in terms of the margin pressure. So, we're expecting the margins to come off on a year-on-year basis to around 21% versus 27%, with a profit decline of over 30-odd% expected this quarter. Remember, the decline range for the profitability is anywhere between 26 to 40-odd%. What we will be watching out for will be obviously the commentary with regards to US pricing pressure for the Lupin management, in terms of the outlook for the North American markets, and most importantly, also the update with regards to the warning letter which they've received on the Goa plant and the Pithampur Unit 2 plant, and when they expect the remediation to be complete.
Okay,
the globe, we are seeing a sharp sell-off in the equity market. So let's see whether there is some respite in the commodities arena. Manisha Gupta joins us with the update. Manisha, do you have any good news for us?
Well, not across the globe, not across the sector rather, but the metals as a space definitely has seen a buying come in. So if you look at the copper prices, they have gone to a multi-month highs. We also have seen the likes of nickel, lead, etc. gain between 1 to 3% overnight. Shanghai, of course, hasn't been able to follow through with that much of a vigor, but we are trading in the positive for the metals as a space. But the US dollar rally has seen a bit of a pause. The speculative long positions, which has gone into unwinding, does see an opportunity to buy on the lower side. Many of these metals, remember, are in a deficit. So fundamentally, we are on a strong footing here. And the expectation is that as soon as China comes back from its Lunar New Year holidays, you will see restocking come back for this. So you're not looking at a sharp sell-off coming in on the metals because of strong fundamentals, for strong speculative moves coming in here as well. But on the other side, when you look at the gold prices, they have continued to decline. The crude oil prices, especially for the Brent, did see nearly a couple of dollars go down yesterday. So that has seen some opportunity buying come in as well. But yes, energy and precious metals are under pressure. The industrial metals, in the meanwhile, seem to be faring well.